Ladies and gentlemen, welcome back to the channel. I hope you enjoyed your weekend, but you are ready for a potentially crazy week ahead for AMC stock. As this article from Investor Place says, the cost to borrow AMC stock has surged 380% this week. AMC's exorbitant cost to borrow fee could cause short sellers to capitulate. We're going to get into what he says here and why he thinks the short interest is actually higher now than it was at the last reported short interest number from the exchange, the legal, quote unquote, legal short interest number. So we're going to get into everything you guys need to know. I'm going to give you one final rundown of my bullish expectation for this conversion. So I hope you are ready. And I hope you are buckled in. Let's go ahead and get straight into it. So, first things first, this article talking about short sellers capitulating. Now, it says last week, the two-day hearing to discuss the conversion of AMC preferred equity units into AMC Entertainment concluded, although shareholders will have to wait a bit longer until Vice Chancellor Morgan Zern makes her final decision. Zern did not provide a specific date on when she would make a decision, although she noted that it would not come this week. This came after Special Master Corinne Elise Amato issued a recommendation in favor of the conversion. Since then, the cost to borrow fee for AMC stock has exploded higher. The cost to borrow fee currently tallies in at 947%. That's compared to a reading of 855% yesterday and 197% on June 26th. Generally, a stock has an average cost to borrow fee ratio between 0.3% and 3%, which means that AMC's cost to borrow is extremely elevated. The cost to borrow fee increases when short seller demand is high and falls when demand is low. A high cost to borrow fee can also influence short sellers to sell out of their existing positions by buying the underlying stock in an attempt to escape the high fee. What this means is that a high cost to borrow fee can actually add to the effects of a short squeeze. As of June 15th, there were 122.09 million shares of AMC stock sold short. That's equivalent to a high short interest as a percentage of free float of 23.64%, which increased by 4.5% compared to the last reading on May 31st. With the cost to borrow fee rising significantly in recent days, investors could rationalize that short interest has increased since June 15th. According to The Street, many Wall Street analysts believe that the conversion will be successful. Arbitrage traders have taken advantage of the situation as well, as evident by the high cost to borrow fee. Now, essentially what he's saying here is the short interest is probably higher than what we expect, and I think that is not big news to you guys. I think you guys also know that the short interest is a lot higher than what we currently get reported on, but they're basically saying the cost to borrow fees increasing the way they have makes it a lot more likely that the short interest has also increased. Now, these cost to borrow fees being this high puts pressure on all existing short positions. You literally can't win, right? Let's explain this again. When cost to borrow fees are 950%, you cannot win as a short seller. You have to see a very big move down. AMC stock recently has already done that. You've already moved down. You're not going to see a huge move down from here, in my personal opinion. Let me tell you why that is. If you have not heard this already, well, welcome back. Well, welcome to this video, because a lot of people have already heard this. But I think you really need to understand this more than just hearing it. You need to understand it. It works like this. We expect a bearish catalyst. The court date, the reverse split, the dilution, all of that. We expect it. It's priced in. If it's not by now, we have a problem. Markets are smoking something, okay? Well, given that, what comes after the bearish catalyst? Like, some bearish catalysts are just bearish, and there's no good that comes out of them. And then, in that case, a continued decline would make sense. With this bearish catalyst, you get the bearish catalyst, and then you get a huge positive. And that is AMC raising $10 billion of capital, $5 billion. It literally doesn't even matter. The number is so large that it's a positive either way. We're not talking hundreds of millions of dollars. We're talking billions of dollars. That means that if you are short in AMC at that point, your short thesis is crushed. AMC, even the box office, has been doing much, much better recently. And even as B. Riley Securities said in the last video, they expect AMC to beat on earnings and to give us a smaller loss. So you raise billions of dollars, that's a positive thing. AMC's fundamentals have also been improving. That is also a positive thing. So after the bearishness, the initial bearish pressure that we could see on AMC stock, that turns into a very positive right after that. And that's why I think shorts are going to start covering on their short positions after this conversion actually does happen, or before the conversion happens, but after the judge gives us a ruling. Now, a ruling on this could come this week. That's where things get a little bit crazier. We don't know an exact date to expect this. And I think the judge wants to do this to try to make it so people can't position for this necessarily. So I think it makes sense for it to happen this week. If it does, well, we could be in for a very big rally, in my personal opinion. Now, let's take a look at some of the data here. You have short interest of free float at 22.58%. This is the estimated number. Could be closer to 25% or potentially even higher than that. You have $500 million worth of short positions currently on AMC stock. A free float out on loan at 34.7%. Shares out on loan 179 million. Days to cover sitting at 9.06. Cost to borrow at 206.87%. And 91.45% share utilization. I think this is ultimately because Ape and Intera Capital and other big firms selling out of Ape recently. The Ortex has probably picked up some of those extra shares as AMC Entertainment shares and not necessarily as just Ape shares. Now, AMC stock remains on the threshold securities list. No shocker there. We've been on it for almost a week now. Typically, when you are on the threshold securities list, you tend to get a more bullish rally rather than not. Now, live short interest of free float, 22.6%. 116.68 million shares that are currently sold short. Again, big story is the cost to borrow fees, which are going to put a lot of pressure on shorts to cover on their short positions. You're not just seeing Ortex's estimates for the cost to borrow max and cost to borrow average being almost 1,000%. It's actually Interactive Brokers this time around, which favors hedge fund and institutional clients. Not too many of you guys have an Interactive Brokers account. They're mostly for hedge funds and institutions. Now, cost to borrow fees from Interactive Brokers, about 947%. That is absurd. That is ridiculous, okay? And that is going to be a big reason why shorts potentially do opt to cover on some of their short positions. Now, as far as the option activity has been very bearish as of recently. No surprise, you guys already know this. You're seeing positive order value in between 1 and 5% on any given day basis. But I mean, that's kind of as to be expected as hedge funds kind of pile on to a narrative and stick with it until that narrative does ultimately break. Now, what you've seen on Friday was actually quite interesting. The last couple of minutes of trading, you've seen quite a few bullish options come into AMC stock. Take a look at some of these options. You had a $3 call for August 18th, worth $123,000. A January 17th, 2025 $1 call worth $132,000. A September 15th $2 call worth $126,500. An August 18th $3 call worth $227,000. September 15th $2 call worth $118,000. A July 21st $350 call with a break even of around $4.25 per share, worth about $250,000. And a July 7th $1 call worth $260,000. or $256,000. So you actually seen quite a bit of bullish option activity the last literally 10 minutes of the trading day on Friday. So maybe someone knows something, and maybe you do start to get some bullishness with AMC. If we take a look at the July 14th expiration, guys, this is interesting because this is a very small expiration. You don't have a lot of activity overall on this expiration. And that's a big reason why I think AMC stock could actually move big this week, because when you don't have a lot of existing positioning on any given week, especially for AMC, if you start to get more bullish options or more bearish options heading into the option chain, especially those weeklies that expire like a couple days down the line, that's a lot of fresh hedging when there's already not a lot of hedging on the option expiration. So it can give you a bigger move rather than not. Now, the 550 call sitting at open interest of about 5,000. $4 call, open interest of 5,000. $6 call, open interest of 10,000. $5 call, open interest of 15,000. If we take a look at the 450 call, open interest of about 19,000 with 9,000 for volume on the day. Even the 450 put is sitting about the same. 450 put on Friday seen volume of 6,700. So the 450 call actually seen more volume than the 450 put by about 2,000, over 2,000, which is way different than what we've seen recently. Now the 450 put has open interest of 19,000, and the $4 put has open interest of 38,000 with volume of 14,000. If we take a clear look at some of these numbers from Stocko Tracker right over here, you can see 5,100 calls currently in the money, 70,000 calls out the money, 33,000 puts in the money, and 70,000 puts out the money. This is a lot smaller than even the following week, where you have 55,000 calls in the money, 462,000 calls out the money, 380,000 puts in the money, and 465,000 puts that are out the money. So, long story short, if this don't make sense, if you see an influx of option activity, whether it's an influx of calls or an influx of puts, you can see some fresh new hedges, and that can move the stock by quite a bit. You mix the shorts being fucking clueless and continuing to short a stock that has the bad news already priced in, meaning we're going to rally after the judge makes her decision, not fall. Cost of borrow fees around 1,000%. Well, if we get a ruling from the courts this week, AMC stock could fucking explode. And I hope you guys are ready for that. A lot of people are not. A lot of people are not. Even retail is not ready for a rally at this moment in time. A lot of people are still negative. Down below in the comment section, take a look. The more negativity you see, the more bullish you should be on AMC. It's ass backwards. I get it. That's how markets work. So, thank you for watching. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys do want to come trade with me live in real time as well, link down below in the description of this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.